Hey snipers, Foster here. I decided to make you guys a video about something that's easily overlooked, namely candles. Some of you might say, how can you ever overlook candles? Your screen is filled with it. And I'll tell you why. Okay, we are in Coinigy and this is part of the Litecoin 5-minute chart. And my screen is filled with candles, right? Green candles showing that there's buying going on, which results in a higher price. Price will go up. Red candles means that there's selling going on, with the result that price will go down. So that's actually what a lot of people look at. It's basically a line. They see prices go down, etc. Go up and down. And to be honest, you don't need candles to draw certain patterns, right? So I can say, well, right here seems to be a support line, and this is an ascending triangle, and you know, things should break out, and it happened. But we do not just look at this line, we look at the candles. So what information is in candles that you can learn from? That's what I basically want to talk to you about. First of all, how is a candle being built? A candle consists of a bottom here, which is the start or open price, and the top here, which is the finish or close price. And you have these little things sticking out. These are called wicks. Now, on this wick and in this wick, there is actually trading going on. For instance, people are buying all the way up to, in this case, this example, $6, except for there's enough selling here that the price doesn't close there. So this close price below this wick means that there's a form of resistance. Now, there's different types of wicks. You have short wicks and long wicks. Some of them you might have seen are very long. Now, the wicks on top here are called upper shadows, and you also have the ones on the bottom, they're called lower shadows. Usually, an upper shadow is an indicator that people were buying, price was going up to the highest price, but there was a lot of volume, selling volume here, pressing basically that closer is finished down. And that's when a minute, in this case, second minute was over, that's what the price was. And because there's pressure here, which you can see as resistance, price will most likely go down. Doesn't mean immediately, it can take another 1 or 2 candles with another 1 or 2 tall upper shadows that the price will go down. Now in this case, the opening is here, and because this is selling, this is kind of reversed, because when you buy, the open is on the bottom and the close is on the top, and here it's selling, the open is on the top and the close at the bottom. And what happens here is price went all the way down to $1. But there was enough buying here going on to put pressure on there so that the closing price was here. Now this is an indicator, the lower shadow, that prices will most likely go up because you could see it as support. And in my example, price will go up again. There's two things that I want to, actually three things that I want to point out. In my last video, I talked about Fibonacci retracement, and that you look usually at the top of where something was in price and then the bottom. And it's very important that you choose the top of the wick and the bottom of the other wick. Because this is where trading was going on. There was a lot of trading going on here. Kind of like there were battles here, battles being fought, and this is the result. Okay? So the fact that this is a thin line doesn't mean it's maybe only one extreme, one outlier. No, there can be a lot of trading going on here, except for, you know, once again, because of this battle between buying and selling, the result is not on top of this wick. So let's say that I put in a buy order on this green line, and we're in minute 1, and I bought here. Price will go up. Price will go up more. Okay, now, but when I put in this buy order, there's some other things I want to know. I want to know when am I gonna get out of this market. So this would be, for instance, my sell order right here. When I reach this price, I've made my gain, where if it's 3, 1, 2, 3, 4, 10%. And something important as well is this. This is going to be basically my stop limit, my stop loss. So if price will actually go below that number, I want to sell because I do not want to take any losses more than here. And this is 2 more examples of wicks where wicks can work against you and, I guess with you. Let's say in this third candle that the minimum price wasn't $1 but 10 cents. What happens is this wick will trigger your stop loss and start selling. So people are selling, people are selling, people are selling. Your stop loss is being triggered and your position is gone because there's buyers here and they're fighting and it goes all the way up, and this when this minute is over. And so you were pushed out of your position by this wick. And prices went up. And you're like, well, prices go up. I made I'm gaining money. But if you set this before you went to go do groceries or went to school or your job and you came home, where are my profits? Or you sold. Why did you sell? Because of this. That's why a lot of traders like an alarm set. So when this price level is reached, they get an alarm. So they can look into it, whether it's through their computer, phone, or whatever. They can say, oh, look, it was a wick, so we're going to keep our position. Something else that can happen is when this top wick, this upper shadow is actually taller. For instance, here. Let's say that this was the highest price, and we're trading here basically in a channel. We're not going to go any higher than here. This wick, because there was buying going on here, actually triggered your sell order. So you were able to make these profits even though the candle didn't close there or above there. So this is definitely important, especially the one here, when a candle, in this case a lower shadow, can actually break through your stop loss. So be very careful with what you do. I'd like to show you guys a couple of examples here about the upper and lower shadows, and I want to point out a few different types of candles. What we have here, you see here for instance that you have a couple of tall upper shadows, wicks, which could lead to price going down. And in this case the first one didn't, but the second price went down. Here you see a couple of other examples. You have a bunch of wicks here that are taller than usual, and that could lead to a price going down, which it did. Let's find another. Here you see one. Whoops. I need to get used to this. Here you see slightly taller wicks that could potentially, once again, it isn't always true, make the price go down, which it did. And over here you see a couple of tall ones, which most likely would lead to a price going up, and it's where the price went up again. Now this isn't always the case, for instance, and that's why I got to be careful with this and use this as another indicator. You cannot just trade on wicks. Let me remove these lines and give you an example here. I don't see any wicks here that show that the price will go up, nor do I see any wicks here that are substantial that the price will go down again. So it's not always the case. Okay, I want to point out a few other things, and those are types of candles. What you see here is basically a tall candle that has almost no wicks. I gotta take the mouse off there. And those are called marubosus. Basically it means that it's either strong buying or strong selling. Now you also have what they call spinning tops, and a spinning top means that there isn't a whole lot of difference between the opening and closing price, and it could be called, some people call it a standoff, or it's indecisive. Like for instance this one here, right here. See, there's a lot of fighting going on, but in the end there's not a whole lot going on with the price. So not really sure what's going to happen here. Price could go up, price could go down. And then you have the dojis. There's all these sub-variants of these types of candles. If you want to, of course, you can Google this and look into it. I don't want to make this video too complex. But the dojis are basically that there's almost no price difference between open and close, and there are wicks, like for instance this one here. Let me draw this, make a little circle. And here, this one right there. That's a doji. And usually a doji means that there's going to be a price reversal. So if there was a downtrend, usually it will go up. This slightly resembles a doji. There's still a very small amount of price difference. This is not a doji. This is spinning top, just like this is a spinning top. Let me see. This is a doji right here. You can hardly see almost anything between price close and price open and close, and so you see a reversal. So yeah, that's basically what this video was about. It's about candles and wicks. I hope you guys appreciate the video. Use this as another indicator. Don't just go blind on wicks right now, from now on. I know I won't, but I will be certainly looking at these wicks and incorporate this in my trading. Once again, thank you very much for watching. Snipers out.